The name was mentioned in Mahabharata. It was the capital of kingdom led by Pandavas. To know more about the company, please check my full video.
Hello everyone, this is Kurve-Karande and I welcome you all to my fundamental analysis series. And the stock is in front of you. So today we are going to analyze Indraprastha Gas Limited, which is IGL. Indraprastha was the ancient name for the modern city Delhi, and this company originates from Delhi. This company was incorporated in the year 1998 with the aim to lay down pipeline for the distribution of natural gas. This company actually enjoys monopoly. This company is a leading company in the field of distribution of natural gas in India. This company basically provide gas to transport sector, domestic sector, and commercial sector. Now let's have a look at its product. CNG and PNG are the two products of this company. CNG is compressed natural gas and PNG is piped natural gas. As such, there is no difference between the composition of these two products, or there may be a minute difference. But the main difference between CNG and PNG is in the form of their delivery. That means how they are delivered to its customers. CNG comes out in natural gas bottle form, whereas PNG comes out in pipe form. CNG is used in vehicles and PNG is used for domestic purpose. The main advantage of CNG or PNG is that they are pollution-free fuel, which means they emit less pollutants as compared to the traditional fuels. Let's have a look at its area of operation. It operates in Delhi, Noida, Ghaziabad and Rewari. Delhi has a huge demand potential for these two products. Delhi has the highest number of private cars running on road as compared to any other cities of India. Apart from this, the public transport has to necessarily run on CNG as per Supreme Court law. Being thickly populated city, this has highest number of residential complex which provide a good customer base for these two products. Have a look at its background. IGL is a joint venture between GAIL and BPCL. Both GAIL and BPCL are government organizations which are involved in processing and distribution of natural gas. IGL was listed in stock exchange in the year 2003. When it started, it has 9 CNG stations and 1,000 PNG consumer. But today, it not only operates in Delhi, but it operates in nearby areas of Delhi. For example, they operate in Noida, Ghaziabad, Rewari with 463 CNG stations, 10.29 lakhs residential consumers, and approximately 4,100 commercial consumers. The management is fairly well diversified with 10 board members, 2 from GAIL, 2 from BPCL, 1 from Government of Delhi, and it has 5 independent directors. Presently, it has only 2 independent directors. IGL gets strong support from GAIL and BPCL, which helps them to get support in their administration and operation. The presence of Government of Delhi as a minority shareholder helps them to get speedy administrative approvals. The management is quite experienced in oil and gas sector. Let's have a look at its shareholding pattern. 45% of the shares are held by the promoters, which is GAIL and BPCL. 5% is held by Government of Delhi, and 20% is held by FIIs, which is foreign institutions. Then 9% is held by mutual fund houses. 1% is held by IFIs and bank, and 8% is held by insurance company, which is LIC of India, and 12% is held by public or the retail sector. Acquisition of equity. This company has acquired 50% of the shares in CUGL and MNGL. CUGL is Central UP Gas Limited, whereas MNGL is Maharashtra Natural Gas Limited. Both these companies, that is CUGL and MNGL, are involved in processing and distribution of natural gas. Let me pull my data. The CUGL is basically operational in the cities of Kanpur, Bareilly, Unnao, and Jhansi, whereas MNGL is engaged in distribution of gas in the cities of Pune and nearby areas. Because of acquisition of 50% of shares in CUGL and MNGL, this company has got geographical diversification. It has also helped them to improve their earning by approximately 10%. Now let's have a look at its past performance with respect to sales and profit. So here we can see that the company has increased their sales and profits slowly but steadily. And if we compare the figures of sales and profit from the last 3 years, we can see a compounded growth of 16.08% with respect to sales and 20.83% with respect to profit. Here I have taken the graph of last 5 years, and here you can see in the year 2015 the minimum price of the share was 75.76 and it has reached to its maximum level of 523 in the year 2019. So here we can say that the stock has improved slowly but steadily. And let's have a look at the valuation of the company. The market capitalization of this company is 34,212.54 rupees in crores. Market capitalization is the net worth of the company if I am where to buy the whole company. EPS of the company is 16.95. EPS is earning per share. That means how much you are earning behind every one share held. PE ratio of this company is 28.83, whereas the industry PE is 25.83. That means this is the PE of oil and gas industry, which is 25.83. So the stock seem little overvalued as compared to the industry PE. Lower the PE, better it is. PE generally gives us the idea about how much times you are ready to pay to buy to acquire the stock. Now the dividend of this company is 120%. Don't be happy looking at the figures of dividend because dividend is paid on face value and the face value of this company is only rupees 2. Then the EBITDA of this company has grown by 15.12% as compared to the previous year. EBITDA is earning before interest, taxation, depreciation, and amortization. That means it's a gross profit which the company is earning before deducting interest, taxation, depreciation, and amortization. ITR of the company is 113.17. ITR is the ability of the company to manufacture and sell its product within a year. Let's have a look at this graph. I have taken this chart, price chart for last 1 year, and in the last 1 year, the highest price which it showed was 534.20, and the lowest which it showed was 284.05. And within a year, it gave a return of 40.06, which is very good return, I can say. Here you can see there was a downtrend in the price, and we can see the date was 23rd March 2020, and this was because of the declaration of lockdown. But again, the share bounced back. Let's have a look at the strength and the weaknesses of this company. This company is bidding for new cities, which means they are trying to penetrate in new cities. They want to increase their distribution channel. They are also trying to keep pace with the changing environment with respect to automation and infrastructure. This company is zero debt company, which means it has no loan, no pledging of shares, nothing. Pledging of share is buying loan against the shares. The promoters buy loan against their shares. ICRA, which is a credit rating agency, has given a triple A rating for this company. This rating is generally given based upon the ability of the company to pay back its loan or to pay back its debt. Now, a very big threat for this company is the elimination of monopoly, PNGRB, which is Petroleum and Natural Gas Regulatory Board wants to eliminate monopoly of this company. PNGRB is a regulatory board which lays down the framework for the functioning of oil and gas sector. They are also involved in the protection of the interest of the entities who are involved in oil and gas sector. Now, why they want to eliminate this monopoly? The reason behind this is they want to introduce competition in the market. They want to improve the market efficiency, which will ultimately give or transfer the benefit to the end user or the customer. This company recently tweeted and said that they are going to revise the prices of CNG from 42 rupees per kg to 43 rupees per kg with effect from 2nd of June 2020. This was done because they wanted to make up the losses which they have incurred due to this coronavirus situation. Because of the nationwide lockdown was announced or imposed, the company's sales figure was hampered. So, in order to make up the losses, they have increased the prices. They also have to incur the fixed expenses or fixed expenditure of paying the salaries to the employees or the maintenance charges or the rent which they have to pay. So, in order to make up all these losses, they might have increased the prices of CNG. So we saw the functions of the company, that is to distribute natural gas. We also saw the products of the company, that is CNG and PNG. The management is also getting strong support from the government. And we also saw the past performance of the company, that it got a return of 40.06 within a year. And the biggest threat for the company is that their monopoly is going to end. And the recent news which was tweeted by this company is that they have increased the price of CNG. So this was my study, my analysis. So don't buy the stock based on my recommendation. Before buying the stock, you do your own analysis, your own studies, and then take decision accordingly. So that's it from my side. Till then, bye bye. See you next time. Stay home, stay safe.